Today, we are discussing rollovers for business startups, or ROBS. In short, ROBS will teach you how to use your retirement funds, tax-deferred, penalty, and debt-free. This innovative resource has become the fastest growing form of funding to help someone start, acquire, or grow a business. Two ROBS experts have created a series of comprehensive educational videos to help you become an educated and successful entrepreneur. The first, Larry Carnell, is the National Award-winning Entrepreneur of the Year, business and franchise expert, and Vice President of Benetrends Financial, the company that discovered this legal pathway in 1983. Carnell is recognized as one of the country's foremost ROBS experts and is credited with helping introduce this creative funding, wealth-building protection program. Joining Carnell is CPA Gary Bodie. Bodie holds a master's degree in accountancy and is considered a leading national expert on ROBS structures. He is also a business lecturer and contributing author on ROBS and C Corporation structures, which can help maximize your exit strategy benefits while minimizing your taxes. In addition, Bodie runs his own practice where he advises and works with entrepreneurs with ROBS-structured businesses across the United States. What are the pros and cons of a C Corporation?
Well, as you know, there's a variety of business structures. Every type of business structure has certain features, benefits, and limitation. That's the reason it's important to go to a professional, someone like Gary, who's helped a lot of people structure a variety of businesses, to help them understand what the best option is for your particular situation. Our role today is specifically, rather than spending hours talking about the benefits of every type of structure, to specifically talk about the benefits and potential limitations of a C Corporation. With that being said, the big question that's often asked is, why are C Corporations growing in popularity? Well, to be quite honest, there's a variety of reasons. Taxation, both current and proposed changes, rising healthcare risk and cost, fringe benefits growth, and funding benefits are some of the reasons why. To talk a little bit about the taxation issues, as we both know, or both of us know, is that LLCs and S-Corps are pass-through entities, which means the profits of the business are directly taxed as income. C Corporations have the potential to retain some earnings and pay taxes on part of the income, retain part of it. When that happens, there is the potential of having double taxation, not only on the corporate profits outside of what you pay yourself for a salary and other expenses, but you also have the potential to have to pay dividend tax. So corporate tax and dividend tax, thus the term double taxation. A full-service design firm can help design programs that can often eliminate that risk. And that's another reason virtually every C Corporation you ever find will have retirement plans attached to it to find ways to mitigate those taxation issues. You know, if properly structured, it can actually be less expensive to have a corporation. Let's say, for example, you've got a business with an excess of $50,000 profit. In an LLC or an S-Corp, you could actually pay that money to yourself. It could push you up into the 28% tax bracket, plus state income tax, plus payroll tax. You could lose 40 to 50% of that money. But in a C Corporation, you could actually retain that money and only pay 15%. If you're not paying out dividends, that's the only tax you pay. If you have a full service design firm that will customize a plan, they can actually show you where you can take 100% of that money pre-tax before a single dime in taxes are taken out, move that money directly into the retirement plan to invest in the business later on. There's also a couple of other taxation issues, the carry forward issue and income shifting. Gary, can you speak to that a little bit?
Well, income shifting happens when you don't use a calendar year as a fiscal year. It's a technique for the first year. To be honest with you, I don't find a lot of folks making a profit in the first year, so I think that's kind of a moot point perhaps. But I guess the main point that I'd like folks to know is that even though C corporations have a bad reputation at the moment, that if you do them properly, they have a lot of advantages, and there's no reason really not to ride out your entire business career as a C corporation. And I think C corporations are going to be getting better tax treatment. It certainly looks like it's going to come down, that the dividend rate's going to come down. So that's pretty much what I try to get folks to understand, is that even though it seems more complex and might be a little bit more expensive, there's no reason to really not use a C corporation.
And also, if there's a loss, can't they carry forward those losses to
Yeah.
offset future?
Right, I get
income?
that all the time too, and of course that's in the first year. They generally have their setup costs. A lot of times ROBS is used for franchises and the franchise fees, and all that stuff will carry over. And if you do leave money in the corporation, the first $50,000 is taxed at 15%, so that's not even all that bad.
That's much lower than
Yeah.
even income tax.
Yeah.
Now, what about the franchise and margin tax? In certain states, there's
Yeah.
issues there that can be expensive for an LLC.
Yeah, what's happening now since the recession is the states are getting a lot more aggressive in their taxation, and so they're coming up with different things. And this margin tax in some states really comes into play, and usually your C corporation isn't subject to those, whereas other types of businesses might be. Larry, you know the states which those are?
Yeah, specifically Alabama, California, Kentucky, New York, Pennsylvania, Tennessee, and Texas. Of course, Delaware also has a flat fee, but as a C corporation, you can avoid those, so that's another advantage. The big issue, I think, going forward that I believe is going to be a major advantage of having a C corporation. Of course, if the new tax law comes into play, they're anticipating tax rates in the low 20% compared to 30 some odd percent. That's going to be exceptional. So we may see a magical transformation to people recommending these all over the country. But the only thing growing faster than healthcare premiums are healthcare deductibles. In any business structure, you can run through healthcare premiums as a deductible, as a business expense, but you cannot do a certain amount of life insurance, disability, long-term care costs, and deductibles through the revenue of a company, but you can do that in a C corporation. Healthcare, 10 years ago, my healthcare deductible was $500. Now it's close to $5,000. And it's projected, because of the rising cost of healthcare premiums, people can't not continue to afford double-digit increases. So the only choice they're going to have is to dramatically increase their healthcare deductibles.
Okay.
So now, especially if you're in your 40s and 50s, the risk of having healthcare issues and long-term issues become very dramatic. Again, the only thing growing faster than healthcare premiums are healthcare deductibles. But the only thing growing faster than healthcare deductibles is out-of-pocket healthcare costs. That can be devastating. For decades, they were anticipating the average out-of-pocket healthcare expense for an individual would be tens of thousands of dollars. Now they're predicting it's going to be hundreds of thousands of dollars. A lot of experts are predicting within the last 6 to 12 months of your life, we will now spend more money in out-of-pocket healthcare costs than what we did the previous 40, 50 years of our life. So having a program that not only helps you run those costs through the revenue of the company, giving you as much as 60% greater buying power, but having a vehicle that will structure it through a retirement plan vehicle, protecting that wealth for the rest of your life, I believe is one of the dramatic benefits that a lot of people are not catching.
Yeah, when I explain that to clients, that their employee fringe benefits can be paid directly and deducted directly from the C corporation, you can almost hear them relax a little bit, that the C corporation, does have some perks, and I think a big one there with the health care. And that even if it's not ROBS, C corporations, I think, will probably become more popular as time goes on for that very reason.
Well, even with 30-year-olds, we've got a friend that, he can get the Affordable Care Act program, but his premiums are like $300-400, but his deductible was $6,000.
Yep.
So even for younger people, this is attractive. The benefit for people getting older is getting dramatic. It's becoming a major advantage. Of course, the other thing is C Corps have always been attractive for people planning to expand their business. You know, everybody may start out with 1 or 2 employees, but they may end up wanting to own multiple businesses, multiple franchises.
Yeah, I see them diversifying, you know, as time goes on.
And the ability to retain money in a C corporation can be a lot less expensive than an LLC. For example, if you had $50,000 extra profit, similar to what we were talking about, when that goes through as a pass-through, you're going to lose as much as 40 to 50% of that. So over 3 years, you'll end up potentially with as little as $75,000. But if you did the same thing in a C corporation, you'd have, I think, close to $114,000, about 70% more money. And if you have a retirement plan, customized plans can show you how to take 100% of that money, move it directly into the retirement plan, have $150,000 to use as a springboard to open a second or third unit or grow your existing business versus over $75,000. So if you have any plans whatsoever to expand the business, it's always important to structure with your growth and exit strategy in mind, and that's another significant advantage. The other final thing is funding. C corporations have some advantages. First of all, C corporations are the only corporate structure that allows you to use retirement funds, tax penalty, debt-free, forcing the government to assume up to 50% of the financial risk of starting a business. Plus, you have the ability to raise capital through the sale of stock and other vehicles. Of course, one of the things that's happened several years ago, and a lot of people have questions, this sounds too good to be true, but the actuality is that the Small Business Administration, one of the nation's largest federal agency, has formally authorized the use of retirement asset funding as equity injection for an SBA loan. So you could literally take $100,000 from your retirement fund, and in some cases you could qualify for a total investment of over $500,000. So that's another advantage of the program.
You can leverage that.
Yeah.
Okay.
Are there any other corporate C corporation issues that you can think of at this point, Gary?
Well, I like to have clients that do a lot of special meeting notes. I think I've never been audited. None of my clients have ever been audited. And I think one of the reasons is that you look for IRS red flags and you explain them so that they're legitimate. Other than that, I'm a S corporation. I operate as an S corporation because there are some benefits there. However, a C corporation, I would have no problems with that. And if I needed to use my retirement funds to start a business, I'd have no qualms about using ROBS at all.
Yeah, and I know in your situation you have a large number of clients that have C corporations, so you're pretty well versed in the differentials between a C corp and other corporate structures.
Yeah, well, and we also sometimes will go over corporate structures like, you know, if you have 5 apartment buildings, maybe you want to hold each in an LLC where the C corporation owns at least 51% of that.
Right.
And that kind of allows you to get investors because it's, you know, if you're a partnership at the LLC level, you can make a much more attractive proposal to me than buying shares in your C corporation.
Right.
So those are some of the things that I discuss with clients as well.
Well, the biggest concern is the risk of double taxation. How do you avoid it? Our next video, video 5, will specifically address avoiding C corporation double taxation. Thanks, Gary.
Thank you.